I don't know if you remember, it was less than a year ago that Elon Musk took to Twitter and said that he thought the stock price of Tesla was a little too high. Do you remember that? And so the question I'd ask you is the stock price a little too high, or are you finding a way to support it and get behind it?
Well, Happy New Year, Andrew. Listen, when you look at Tesla stock, it doesn't trade on fundamental, valuation metrics. It trades on its growth story. It trades on retail investor enthusiasm of the future that Elon Musk has described for everybody, and that's what they're buying into. And the price, when you look at the market cap, I mean, it is really driven primarily by investors' thought that Tesla can continue to grow robustly. And that's why, as Phil said, they grew about 35% last year. The challenge for this year, given the market cap and given the run up in the stock, is how do they continue that growth going forward? That is fundamental to the business. And that's why you see Tesla do so many things, particularly in the last couple of weeks of last year, to encourage deliveries, whether it's, some free full self-driving availability for customers, or delivering, vehicles to customers. And if they don't want to take it in the last week, they actually move to the next customer. So growth is absolutely important to support that market cap going forward.
Mark, what does the landscape look like as you see it in 2021 and 2022 in terms of EV competitors and some of the other big names, of course, coming out with competition? Is it competition?
Yeah, for the first time, Tesla is going to be facing real competition in the marketplace. As you look at this year, 2021, you're going to see electric vehicle volumes across the world. Obviously, China sells a lot of them given the government regulations. Europe is next, and then comes the U.S. But here in the U.S., you're going to see a lot of new introductions. You're going to see, Ford coming out with their terrific Mach-E, which is coming into the marketplace. You have VW introducing their ID.4, which is a Model Y competitor here in the U.S. and in Europe. You got some trucks, luxury trucks like the Rivian truck coming to compete with the Cybertruck. So, there's real competition for the first time in Tesla's life that they're going to have to face. And their challenge, as you know, Andrew, is they don't make money on the base business of selling, designing, and manufacturing vehicles. They make it on the regulatory credits. They make it on other services, whether it's insurance or selling things like full service driving. They absolutely need to make sure they improve their margins on their vehicles. And they're going to have to do that in a market that's a lot more competitive this year, both here in the U.S., but also Europe and in China.
So let's talk about two things there. You talked about the regulatory credits, which are a key component of their profitability, or at least has been thus far. What does that look like in 2021, 22 to you? And then the secondary issue is, as you just said, from a margin perspective, just on the manufacturing side, what can they do that they're not doing right now?
Well, on the regulatory side, the good news here in the U.S. is with the new administration coming in, the Biden administration, you're probably going to see very early on some increased incentives for selling electric vehicles. That is absolutely going to help Tesla here in the U.S. But as I said, it's also going to help some of those new competitors. If you go over to China, which is the other absolutely key market for Tesla's success, the Chinese government announced as of January 1st that they're actually reducing their electric vehicle incentives by 20% this year. So that'll put a little bit of drag on the marketplace. But overall, here in the U.S., it'll be good news, a good backdrop for selling more electric vehicles. And in the case of margins, listen, Tesla's challenge is they have to what they call localize their production, which they've done in China, for example, for the Model 3. And that's why they've been able to take like 5 price cuts in the last year. They're about almost fully localized there. So for them to continue to improve their margins, they have to improve their efficiency, their manufacturing efficiency. They have to continue to innovate in batteries. And as you know, in September, they had a battery day and they said they were going to significantly reduce the cost of their batteries. That is absolutely key to allowing them to improve their margins.
Talking to us exclusively last hour, While QuantumScape was plunging today, shares of Tesla keep chugging higher. This after the company reported over the weekend its Q4 and 2020 vehicle delivery totals. Now, for the fourth quarter, Tesla reported a record number of quarterly deliveries, more than 180,000, 90% of them being the Model 3 or the Model Y. Here's the number that a lot of people were focused on. It's the bar on the far right. That is the final number for 2020, coming in at 499,550 vehicles. Now, there are people out there, Melissa, who are saying, wait a second, they targeted 500,000. They didn't hit their delivery guidance. That's less than 0.1%. Less than that they fell short. I think essentially they hit their target of delivering 500,000. By the way, the consensus on FactSet among analysts, they believe that they will deliver at least 787,000 vehicles, but we won't get their guidance until they report their Q4 financials 3 or 4 weeks from now.
I think of Kathy Wood of ARK Invest. ARK Innovation ETF, one of the top performing non-leverage ETF, if not the top performing in 2020. And she has been on this show and talked about how she trades around the position because from a portfolio management perspective, it is prudent to do so. And you got to wonder what the play is at this point. What do you think the play is with Tesla at this point?
We've had her on a number of times. We've asked her that question because that's the pushback against her is if you're so bullish, why do you sell it? And she's answered it exquisitely a number of times, so good for her. And I got it as far as I can tell, in terms of that stock, there's nobody better in terms of the analysis. And one thing I've said for a while, and again, I don't pretend to understand Tesla, but I've been saying it since the spring, you stay with it. If you're looking for a reason to take profits or take money off the table, if you're looking for a metric or catalyst, I think it's going to come in the form of volume in the shares. Tesla's been trading about 40 million shares a day-ish. If you see about 130 million share day on a massive move higher, that's your key to maybe pull the ripcord and take some money off the table. That's my metric. And
what do you make of the delivery numbers? I mean, I realized just shy by a couple hundred of that 500,000 that Musk had forecast, but we also did have a pandemic in the middle of this and some key manufacturing shut down too.
Sure. Look, it's a very notable accomplishment to grow units 36%, to ramp new facilities. It's a terrific achievement by Tesla. The question, of course, always is what was in expectations? And I'm a little surprised the stock is as strong as it is today, because I think most people expected Tesla to be able to deliver against this target. And in fact, there was speculation over the last week that they might eclipse that target.
Yeah, I mean, the stock's trading up about 5% right now, about $742 a share. I'm looking at your note. You've got an underperform rating, $180 price target. What do you think triggers that? What do you think, I guess, brings such an incredible, dramatic sell-off to this stock? I mean, it has been largely Teflon until this point, at least recently.
No, absolutely, Morgan. The stock is up about 80% since it was included in the S&P, or since it was announced that it was going to be included in the S&P. And quite frankly, estimates haven't changed at all, nor have the company really announced anything material. So the stock is really, appreciating, we believe, largely on momentum. Now, what reverses that? It's very difficult to call. If there's a rotation in the broader marketplace towards value-oriented stocks, that could undermine Tesla and other growth stocks. I think most importantly, if Tesla's not able to deliver against expectations, you'd likely see a material pullback in the stock. And I think expectations are for close to 1 million units in 2021. The company will, in all likelihood, on its earnings call at the end of the month, set its target for the year, and we'll see how that stacks up. But those are really probably the most material things. A disappointment in relative to expectations, or a broader market rotation away from higher flying growth stocks.
Well, Tesla shares doing what they usually do. They're on the rise this morning. The company posting record deliveries in 2020, above what analysts were forecasting, although just shy of Elon Musk's target of 500,000 cars. The stock was last year's best performer on the S&P, of course. It was up over 700%. Its market value is approaching $700 billion this morning, Jim. It's a name we talked about so often last year for obvious reasons, and one I would expect that we will continue to talk a great deal about this year as well.
Yeah, look, there are some reasons for it to go up. The numbers in China were very good. This could be Europe's year. It's a momentum stock. Let's say it was a semiconductor company. What it's basically done is come up with the 386. It had the 286. Now it's got the 386. It could have the 486. If you go back to a chart of Intel during that great run where it became the microprocessor and went from 18th semiconductor to number one semiconductor company, we always were willing to take it up on every single iteration, even with the 46, the Pentium. Each time the stock went up. And that's kind of how you have to think about this. You can't think of it as a really expensive stock. You just have to think about it, which obviously it is. You have to think about it by iterations. And if you think about it that way, then it makes some sense to the people who are watching it go up. The people who are buying it, I think, look at it like that. They look at Musk as a super-duper Andy Grove. And, that way you can justify it. I think you and I, David, are saying it's tough to find a way, but you just view China as an iteration. That's the 386. You view Europe as the 46. You're the rest of the world as the truck, as the Pentium. And then you can figure at least some confine, some metric that makes sense.
Right. I mean, Jim, we've made the point many times. It's not just Tesla. When you talk about larger cohorts in EV, so to speak, whether they be other vehicle makers, NIO, for example, also incredible performance there. Some of them are, or Fisker or Nikola, Workhorse. And there's QuantumScape, by the way, looking down dramatically. That's the battery maker. We also had one on last week called Romeo Power that just came public through a SPAC as well. Closed their deal.
Yeah, where art thou?
Where art thou? I thought the young man who was the CEO is very impressive. But, by the way, I'm not sure why QuantumScape is looking down.
As good as Jagdeep, when you created Jagdeep on the quantum, you created him.
It's funny, they don't compete against them, Romeo. They actually put together the packs themselves and have some very significant investors, as does QuantumScape. Any reason why why QuantumScape's looking down, other than the fact that it was up so much?
Well, I don't know. Look, the Eagles should have won, and they chose not to. I don't know. I mean, anything can happen.
Anything can happen. I know. I'm not sure why. That's why QuantumScape's going to be down 28%, but yeah.
Well, is QuantumScape a bargain at these prices? Well, I mean, again, QuantumScape is just under the umbrella of Tesla, I think.
Right.
Because it's got a little better battery. So this is the AMD. I don't know. During the old days, using that analogy, of course, now AMD is superior to Intel, so anything can happen. But remember, this is a battery company that had $40 billion valuation. Clearly, I would say, once again, a lot of enthusiasm, David, that a lot of younger investors really like these stocks.
Lockups. That's what it is.
Lockup expiration?
Lockup expiration.
All right.
Yep.
Well, the Robin, David, a lot of the people, we can't call them Robin Hoods anymore. What should we call them? Merrymen?
Sure. I like that. Yeah, that's a nice
and women. The Merrymen and women like lockups.
Yes.
The Merrymen like lockups.
They embrace lockups.
I don't want to be sexist here. The married people. They like lockups because it's supply, just like they like the supply with the cruise ships.
Right.
I wish I were being facetious, just like I wish I were being facetious when my non-relative, Senator Kramer, came on and said that the president was exercising his Democratic right to be able to say really nice things to the Georgia Republicans. I think, once again, I mean, there's a fantasy world going on. I am trying so hard to be a part of it, David. It's a big world after all, and the Merrymen have their way right now.